Corruption scandals are piling up, and each new revelation hits harder. Beyond the politics, these allegations undermine public trust, raise red flags for creditors, and erode investor confidence. The Budget Department itself admits foreign-assisted projects are delayed, with the country paying millions in penalties even before construction starts. And even with strong corporate earnings, markets remain under heavy pressure, proving that confidence, more than fundamentals, is what drives capital flows. To break this down, we're joined by respected market strategist and the president of COL Strategic Growth Fund, Marvin Fausto. Hi, Marvin. Thank you for being here with us this morning.
Hi, good morning, Mikey. Thank you for having me.
Yeah, a lot to unpack with you today, Marvin. I was, reading up prior to this interview, and I saw an article online in 2016, and in it, you said that you saw the PSE hitting 18,000 in 2025. We're here now. Of course, the assumptions were continued growth, and barring a lot of external stuff that we're seeing now, no one would have guessed that. But we're just really far from where everyone had hoped we would be in 2016.
Yes. When I did that, Mikey, we were under the assumptions that things are going to do business as usual. They're not going to do a U-turn. And apparently we did. I mean, corporate governance is really a big issue. Earnings as well, of course, in the markets. But I think corporate governance and transparency is really what's driving away foreign investors. And I think as of now, as of yesterday, net foreign selling just for this year, 41.9 billion pesos net foreign outflow. That just tells you foreigners have lost or still continue to lose confidence in our market, and our PE has now down to a very large discount because of that big issue. We're just 10 times PE during the Pinoy. During that time, we were about 16 to 18 times. If we maintain that, we would be much higher today.
Yeah, it's a very bleak picture, Marvin. Participation has been thin. Year to date, we're down by 5 to 6%. It doesn't seem like much, but it just shows that we haven't gone anywhere. Lots of foreign selling, but companies are still reporting solid earnings. Investors are still selling. How would you explain this disconnect?
Companies continue to earn money, but although less than expected, we're expecting about 8% this year. They just did about 6% in the first quarter and 3% median earnings for the second quarter. So below expectation, but it's still a growth nonetheless. However, it is the valuation, the discount to the risk, the discount to the valuations that we have. If you are an investor and you look at the country and the risk is higher, you have to put a discount to that, right? So that's just a basic investment guideline that we put. So there's a higher risk, you put a little bit of discount. So we should not be trading around 12 times anymore. We should be at 10, which is basically where we are today. Now, even if growth earnings are continue to grow, even if our economy continues to be one of the fastest growing economies in the world, no? So there is definitely a disconnect. You have to look beyond the index. You have to look beyond the economy in order to profit from this market.
Mm-hmm. Yeah, it's really governance issues that are front and center. How much? I mean, there are a lot of external factors on the docket too that are just ahead. How big of an overhang are these current governance issues that have come to fore, Marvin?
Just look at other countries. We have one extreme is the Korean stock exchange up 30%. In that country, they sentence to jail even their president. As long as 25 years, you can see their history. Their presidents, they go to jail for corruption. And they're doing very well. 30% year-to-date performance of Korea, the best performing stock market. You look at the other end, Thailand. There were reform movements there, but they were not allowed. I mean, they were elected. The young reform movement was taken out of power. And their stock market is down 10% year to date. Thailand, and us, of course, we have these issues. We're down 5 to 6%. That tells you that that investors will put a certain valuation, a certain discount to countries that are not giving them good corporate governance. That because investors will not feel maybe reporting to their superiors that why will you be investing in a country where there is very low governance and you have to put a certain price to that. So that I think that is what's happening right now. But I don't know. That I think we have to look at beyond this already, Mikey.
Yeah, from an outsider looking in, and even from us insiders, it's scary that the leadership shakeup at the Senate, people, senators themselves, people in our lawmakers are being implicated. There are a lot of allegations being thrown around, and going to the heart of it. I talk to a lot of people, and the question is always how do we break this cycle of corruption in the Philippines? What's missing in our lawmakers? A lot of people say it's it's lack of integrity, it's a love of country that's what's missing. But when you think about it, Marvin, you cited a lot of examples in Korea, and there is the gauntlet being thrown on people that abuse power. They say that here in the Philippines, there is no more fear of persecution. We've shown in the past it's a lack of historical accountability. The lack of fear has made everything more brazen and more endemic. What are your thoughts on this, and what are the downside risks? We're at 6,100 now. What's the downside risk if we don't get our act together?
Yeah, we really have to get our act together. I mean, here, we just have to go back to what we learned in kindergarten. The people who do bad things, they stay in the corner. They get punished. And here, we just saw that you can drive a Ferrari, you can wear a Patek Philippe, even if you're a bad person, and you don't go to jail. So we just have to implement the law. We just have to implement the rules. Now, there are certain things that are happening that are below the radar right now, especially like for example, the appointment of the new SEC chairman. And Francis Lim, attorney Francis Lim, he is coming up with certain regulations, certain rules, penalizing even Villar Holdings, 12 million for not reporting proper financial statements. We, I mean, these things, they are small things that we hope that we will see more of it. No, so some things that will happen that are hopefully signs of reform, signs of improvement. Now, what's happening in DPW is now where people are losing jobs, but that's only in Bulacan. You see a lot of all other regions in that country are watching, and they will have to make sure that the ghost projects will not be ghosts anymore. I would not be surprised that certain infrastructure spending will be implemented, certain ghost projects will come to life, and we will see this infra spending coming over the short term. I think that's just a natural thing that we'll have to do. Otherwise, they lose their jobs, right? So there is some silver lining in this thing, like something like a Noah's Ark, meaning the God sent the rains. So it came out. It came out.
Yeah.
We need something like this, right?
Yeah, worried by the corruption allegations, we hear that lawmakers are now suddenly filing erratums, which are the opposite of insertions. They're scared now, which is the silver lining, as you say. So Marvin, I wanted to ask you, in times when governance risks, not fundamentals, are in focus, is it smarter to stay liquid, or would it be smart to lean into undervalued stocks?
I go back by the philosophy of the Chinese, where there's like Wei Qi, where there's crisis, there's opportunity. Now, when these things happen, there are opportunities that come. Even the bond market and the stock market, you just have to sift through the noise. I mean, their stock performance is doing very well. Like Pure Gold is up 39%. The REITs are up. I mean, you just have to sift through this. This is what we're doing in COL Strategic Growth Fund. That's what we're doing. That's what we have been practicing. That's why we're beating the market. We're beating the fund, beating the market right now because we're looking at different things that will benefit. Pure Gold is benefiting from the zero, will benefit from the zero importing of American goods, right? Because of the SNR franchise that they have. Now, we have to look at different things. So sift through the noise. Sift through the noise. The opportunity will come. And we just have to do our homework.
Yeah, we have to do our homework, or we trust guys like you. So going back to those opportunities, these resilient opportunities, asset classes that can withstand these shocks. Tell us more about where you see the opportunities as we close out 2025 and head into 2026 as the macro environment changes, on the front of interest rates, the peso, inflation, where the resilient opportunities, and then afterwards I'll ask you for your outlook for these figures.
Immediately, what we're going to expect is that the government will cut government spending. The infrastructures will be delayed. Infrastructure in general will be delayed. Some will push through right away because they have to show proof that they're doing it. Now, what's going to happen is the economy will go below target. The economy, like we experienced that before, the underspending of government affected our economy, and that's about 4% of the GDP. Now, that is what's going to happen over the short term. So people will be disappointed, and then the economy will slow down, and then interest rates will go down. So when interest rates go down, the bond price go up. So that's your first opportunity, right? It is the bond market. That's the first one that you have, because when economy slows down, interest rates go down to spur up the economy, and you have the bond price going up. Then that's the first one. The second one is really in the stock market, but not the market as a whole, right? It cannot be as a whole. You have to look at it like the ones that will benefit from this. We do not have AI like the other countries, but we have consumer spending will now be spurred because now we did not talk about the gaming. The gaming is now regulated, right? So the gaming expenditure will now shift to the consumption expenditures, and now it will become more of the basic goods that will come in. Rice prices have gone down, so consumers now can spend over the second quarter, the fourth quarter, and for Christmas as well as the first quarter. So you have opportunities in the bond market, you have opportunity in the stock market, but not as a whole. It is selective. It's an active investment style. You just have to allocate depending on your risk. I believe that we should be more in bonds, like 60-40, more particularly in the bond market, as your total exposure. But in the equities, which is what we have, no equities in the Strategic Growth Fund, you have to be a little bit more concentrated in companies that will benefit from all of this thing that's happening, right? So I think that it's where we're going to see. We will see interest rates go down. The central bank is nearing its job. It's about to be finished, meaning the cutting of rates is going to be done. I think just one more this year. We will now have to watch what the Fed will do on the September 17. Are they going to do two more cuts, and then next year we expect interest rate will continue to go down in the first quarter as well.
So you're expecting one more baby step, 25 basis point cut by the end of the year.
Yes, yes. And then next year, I think we'll have to stop. My reading is that inflation now will be increasing by the second half of next year. Interest rates also will be increasing.
Yeah,
So
after the August uptick, Marvin, in inflation, where do you see that headed as we close out 2025?
I think it will go up. I think it will go up near the two, but not over the 2%. I think there is this low base effect that is coming out, and somewhere around the 2%. So that is where I see inflation is going to come in, but it's still unacceptable in a good inflation rate that the central bank is able to do.
Yeah, still within the central bank's 2 to 4% target.
Yes.
Another thing, Marvin, the peso. Where do you see that headed this second half and as we close it out?
There are a lot of things happening in the peso. You have the weakness of the dollar to peso relative to the peso, and we have our deficit. So two things pulling that. But economists believe that it will go around the 56 to near 57 level. I think the importation is already happening. So there's demand for dollars right now. But on the fourth quarter, we expect OFW remittances and all of these things that coming in terms of the dollar supply, and the expected weakness in the dollar because of the expected rate cut in the Fed. Now, if that happens, our peso can relatively strengthen compared to that, but we have the other thing that pulling us down, to depreciate, which is the the trade deficit that we have in the country. So more or less, we're somewhere where we are right now, about 56 to 57 level.
And you mentioned the deficit. So let's talk about the fiscal position. It widened by 16% year on year in June to 766 in the first half. Do you think this deficit will narrow or widen as we close out the year?
I think it will continue to widen, but not very much from where we are right now. Uh, I think what happened just recently, we just have to reduce their spending on the infrastructure side. So because of what they will have to delay things, so it will be delayed to next year. The president already announced that they will just stop all these flood control measures. So expenditures will be cut. So where the deficit, the fiscal deficit will just be somewhere where we are right now.
You know,
I would think.
government spending is so important because it helps pump prime the economy. Lastly, Marvin, just words for the viewers, the business leaders that are scared of this reduction in spending on account of the governance issues and everyone being scared by all the corruption. It's going to reduce spending and people are worried about that. What would you like to say to our viewers that are worried
I
about
think,
this?
yeah, I think these are all noise, and I think it will die down soon. I'm just hopeful that things will end up for the better, meaning we see the reforms that will come in as far as the general market is concerned. But for individuals, for people who are watching on their own business, I think they just have to focus on what they do best, meaning that the businesses let take out all this noise. You just work hard and make sure that you diversify your portfolio and your investments. Concentrate on your business, but put aside a certain amount for your long-term savings and long-term investments for your retirement as well. So businesses will have to focus on that. The government will spend less, but could increase. Consumption could increase. So those businesses in the consumption, expect that to continue to be robust, continue to be resilient. The government will cut expenditure, but not completely, because budget is still strong in other areas of the government, but they will just be delayed. So, and it will come. It will come next quarter, and I think, hopefully, I just have strong faith that things will pan out better after this.
Yeah, hoping for that. Thank you so much for your time, Marvin Fausto, the president of COL's Strategic Growth Fund.
Thank you.